Hi, and welcome once again to Finance Solutions TV. In this episode, I'm going to explain what serious illness cover is, what it covers you for, and also some of the statistics of claims made in this country. Serious illness cover, or specified illness cover as it's also known, is a benefit which pays you a lump sum if you are diagnosed with conditions covered under an Irish Life policy. You can use this lump sum in many different ways. For example, you could clear a mortgage or debts, pay medical bills, or simply to help maintain you and your family's standard of living during a very difficult time. Also, you may have to adapt your house to make your day-to-day life easier, and a payout under serious illness cover would help with all of these outgoings. This type of cover is something I'm very passionate about. Working in this industry, I get to see regular cases where clients have this cover and a benefit it brings to their lives when they receive the payout. But also, unfortunately, I also see the opposite side, where clients choose not to take this cover and are faced with very serious financial difficulties as a result. When I complete a review, I will simply always recommend this type of cover. I firmly believe I would not be doing my job correctly if this was not included in the very basic of a recommendation I would make. Looking at the statistics of claims paid out by Irish Life, Ireland's largest insurer, in 2011, you can see there are 5 primary categories which dominate their payouts, and they are cancer, which accounts for an incredible 62% of their payouts, MS, heart-related conditions, stroke, and a broad category called loss of independence. This is where someone loses their ability to care for themselves, and the normal instance we would apply to this may be as a result of an accident, for example, where someone becomes wheelchair bound. All of these conditions are very common, and we all know someone who is or has been affected by them. It's very important to differentiate at this point that this is not a terminal illness. The concept behind a serious illness is that the claimant in many cases will recover and go on and live a healthy life. When we look at reviews, we will always look to protect ourselves in the eventuality of death. But the stark reality is that most of us would suffer a greater financial threat if we could not work due to a serious illness. The first recommendation, which I would always suggest, is to ensure your mortgage and debts are paid off in full if you contract a serious illness. If this is not feasible, we then try and correlate an amount that would match maybe 3 years' salary so that you can protect yourself for that period of time, allowing you time to recover from your illness, but the payout would ensure there will be no impact on your financial position for that period. There is always a structure we can work that works for you, but the key concept is that you accept and understand the benefits of this type of cover. This is very much a discretionary spend and something you don't have to take, but I always make the same example with car insurance we all buy every year. We can protect ourselves for third-party fire and theft, but we would never consider that, as we all go for comprehensive to make sure we protect ourselves too. This is for a car, so I always ask clients to apply the same thought process when considering serious illness. This type of policy can be applied on a standalone basis or as an additional extra benefit on a decreasing mortgage protection plan or level term life assurance plan. So let's start with a mortgage protection plan. If you take out a mortgage for €200,000, say, and wanted to protect yourself against life and serious illness, what would happen is that if you made a claim for the policy for serious illness, the policy would pay out directly to your lender. As the cover is what's known as accelerated, it means it decreases your life assured amount by the amount paid out for illness cover. So in this situation, the policy would cease as the life and illness cover would be the same amount. This is very specifically designed to protect against a mortgage debt, and with this type of product, the cover is decreasing in line with your mortgage. I would refer you to an earlier episode where I explain in detail what a mortgage protection policy is, and you can find that on the website. Independent serious illness cover then can be standalone or added to level term life cover. With this type of cover, you're protecting yourself for a specific amount as it will not reduce. So for example, let's take a couple who've completed a review and have chosen €200,000 on life cover and €100,000 on serious illness. In this example, the couple would each be covered for €200,000 in death and €100,000 in illness. So potentially there could be 4 payouts in this example. In Ireland, we are massively underinsured in this area, and the average claim in 2011 was a little under €60,000. Now imagine your own scenario. If you contracted a serious illness, would this protect you sufficiently? Of the claims paid out last year, over 31% of the clients were aged between 40 and 50 years old, and the average age of a payout was for an adult aged 50 years old. I will leave you with this final statistic. You're 4 times more likely to contract one of the 38 illnesses covered than you are to die before the age of 65. So consider that in your next review. So as always, if you'd like any further information on this product, then please don't hesitate to call or email me directly. Once again, many thanks for watching Finance Solutions TV, and I'll see you in the next episode.